Okay. Hello, fellow traders everywhere. Adam Hewison here, co-founder of MarketClub, with your third attempt with the weekend update for the trading week ending 10/14. Well, we've had some challenges here, that's for sure, and it's definitely been my challenge. So anyway, we've got what we want on the screen, and we want to get started and looking at the markets. And let's do that right away. So here we are at home page. This big week coming up. We've got some reports coming in from the Citi is reporting Wells Fargo, Apple on Tuesday. So lots of things are very important to this market will be coming in. So let's get started looking at the charts, what we always do. And for that, we'll go to our portfolio manager. We'll start with the S&P 500. That actually had a pretty good week last week, very good week as a matter of fact, on very thin volume though. This is the bottom line. So here we are, we're looking at the chart. It's a weekly chart, you can see right here. And you can see that we've had this choppy move. We moved down below the lows, came right back again, but we're not out of the woods yet in this market, in my opinion. Here's what I'm looking at. I want to draw the Fibonacci. Well, first of all, our monthly trade triangle is still negative, indicating that the longer-term trend for this market is still down. Also, some of the long-term moving averages are still pointed lower. Also, if we put our Fibonacci on, grab here and drag it down to here, you can see that the first 50% retracement was back here, and you can actually move this up a little bit so you can get a better idea. So got very close to the 50% here, and we move it down here, and we've got to the 50%. The next level we're looking at here is 1248, which is basically where this market should run into have problems, I believe anyway. So let's see how this plays out, but the 1248 level is going to be a very important level in my mind, as it will represent a 61.8% Fibonacci retracement, and this is something that a lot of traders pay attention to. And you can see our signal as right here, 1258, the market's 1224, so we're still in the black. I would say if it gets up to 1248, it would be probably an excellent time with a correct tonation to sell this market. But one of the things I noticed in this market, I'll just pull it down here, is look at how low the volume has been. It really hasn't been a lot of volume in this market. And again, I think we're still on the negative side. So let's go to our next market. I'll go back to the portfolio. And I am looking at silver. Silver was actually higher for the week. Just by about 1%, no big deal, but nonetheless, the trend continues to be down, down, down in that market. Longer term, we see this market in a negative trend, potentially moving down to the $20 an ounce level. So again, lots of negativity there in terms of the market. Plus, this formation that we're seeing here on the weeklies is not exactly what I call a positive formation. And let me just show you how that would be with my telestrator. And if we simply draw, the move down, of course, was right here, which you can see. Strong move down, and then we have this kind of formation here, and I think that's not a good sign. This is usually a formation, a continuation chart to the downside. So let's just take this off here. So that's what we're looking at right now. I think generally speaking, not too much to get excited about in silver at the moment. It's an industrial metal, and if we're right on the market in terms of the trend being in this market on the downside, then for the equity markets, then I think we'll see this market go down. So not a big deal on this market for the week, basically. So let's clear the screen and go to our next market, which will be gold. And that market actually put in a pretty good week. Gold closed up about 2.6% at 1680 and change. But again, the formation isn't exactly a thrilling formation. Longer term, unlike silver, the gold market looks like it wants to do better. However, I think this is a very important top. I don't think we'll see this top taken out anytime soon. And I think we've got to watch our Fibonacci retracements. Well, let's just put that in the levels I will be watching in this market to see how it does. And we're looking at 1725 and 1770. These will be key levels in the gold market to watch this coming next several weeks, but there'll be definitely levels to watch. So generally speaking, the pattern is not particularly bullish. We don't have this energy levels. We talked about these energy fields building. There's nothing much to build on this, and I think will be more of choppy action in this market in the weeks to come. So let's just take this off the screen and go to our next market. In the next market, we're looking at crude oil. Crude oil put a remarkably good performance in for the week we closed, and the crude oil at 87 and change, or 87 flat in this case. It's still not out of the woods. Both our indicators, the weekly and the monthly trade trials, are still negative, and also you can probably just do a very simple trend line here from the highs, and it'll give you a still, I would say, right around these. This market's going to have problems, I think, right around these levels. So let's see how it works out to this coming week. But generally speaking, if you look at the way this market has traded in the past, it has traded, it's had those little kind of blurbs up, and I'll give you a sense of that on my telestrator. So it looks, you know, we had this move up like this, then down, up, down, up, down, up. This is a key level, obviously, the 90 level. As long as this, so that would be $90 a barrel. As long as that maintains that level, I think it's going to be very hard pressed for this market to overcome the downtrend line and resistance here. So I would expect to see the trade triangles, the monthly and the weekly, kick in and start to move this market to test the 80 level and possibly even the 75 level again. So let's see how that plays out this coming week. And let's go to our next market. And the next market we're going to go back to is the dollar index. Now this dollar index took a real hit this week, as you can see on the chart. Boom, a huge hit. I'm not sure it's finished on the downside yet, but if we draw our Fibonacci tools in, and these tools are very, very useful because they help you get a sense of where the market goes. A lot of professional traders use these and watch these tools. That's why I'm sharing that with you. But you can see we've had a 50% correction, 75.88, which is not that far from here. We're 76.60, so another dollar down. That would be a 61.8% correction. The market is, as we go down here, not quite oversold, but it's very overbought before. And we are still in a positive market. Both are the long term certainly is still positive, and near term we have two red triangles, meaning we're going to see maybe a little more pressure come in this market. But generally speaking, it looks as though this is a pullback after moving out of this energy field. We were looking for this market to go to 80, got very close. It I think missed it by just a couple of points. And it's pulled back. So I think, generally speaking, we still remain friendly. We want to see this market regroup maybe in the next week or two, and then we'll see this market go higher, in my opinion. So let's go to our next market and take this off. And the next market we're going to look at is going to be the Reuters Jeffries CRB Index. Now, we have been concerned about inflation and the policies of the Fed in terms of printing all this money, but in reality, the market didn't do that. And this is why you've got to listen to the market as opposed to having a fixed idea of what you think is going to happen. And here, if we look at this market today, you can see that our monthly, whoops, take that off. And let me just clear the screen up a little. You can see that our monthlies are still basically negative. And I think we'll, let me just get this off the screen. And you'll see that our monthlies and the weeklies are still negative on the screen market. And I think that we can see very similar to the other market we talked about, and that is the kind of like little blurbs up and then the down. And it's kind of like, you know, if you just simple sketching, you can just see how this market is really going to be hard pressed to make any new highs much higher than we've gone here. We were looking for a pullback to about the 16 level. It's 317, maybe a little further than we expected. But crude oil was the main culprit there. But let me clear this off and put our Fibonacci tool in just to see where we're looking at. And I think probably, we're so there's the Fibonacci tool. 318 is 50%. 324 is a 61.8%. So that's a number to want to watch this week, is the 318 to 324 level. That certainly should present some resistance, and there could be a higher opening on Monday. Obviously, still a lot of problems still in Europe. That has been cleared up, but we may get a pop based on some of the earnings reports that come out early this week. So 55 minus 55 means it's a trading range you should be looking at. And what we do with trading ranges is, you know, on the dailies, and I'll put this on, we use our Donchian trade channels, and you can see how this market moved out of the Donchian trade channel and really kind of has come back in, which is a normal thing. We're getting back close to the 50% range in terms of the Donchian trade channel. That tends to stop markets. You see how it stopped the markets here, and mainly here and here. We may see a similar thing here with this thing going down. But you see the trend is down. All the things are looking lower. So generally speaking, look to be a little bit negative on this market after it stops this upward its upward momentum. So let's go to our next market, and this is going to be Citigroup. Citigroup is actually reporting earnings this week on Monday, and you can see the market has actually had a pretty good week in terms of closing. This is probably the best closing we've seen in about 3 weeks, I would say, but it's still not out of the woods by a long shot. And you can see this market has generally come down. We've been short on our monthlies from the, let's just do this, we've been short from the 43.40 level on May 11th, and it's just continued down. Have not had a signal yet on the monthlies. The weeklies we certainly did, and it looks as though we may have seen a small turn here in the market, but generally speaking, we still see this market in a negative light longer term. And again, if you look at last Friday, a week ago Friday, I should say, this is the lowest weekly close we've seen in Citi. So I don't think it's too exciting to get super bullish on this market. And maybe Forbes, who said time to buy all these markets, maybe they're right, maybe they're wrong, but generally speaking, you want to work on some sort of game plan, and that's what the trade triangles actually do. They give you a very solid game plan to work from. So let's go to our next market, and that was Citi, Wells Fargo. If you look at Wells Fargo, little different picture with Wells Fargo because you really cleared all of the stuff. Citi didn't do that, but nonetheless, it's still in a negative light from 29.82. We're currently trading 26.67, but it looks to be a lot better picture than Citi, and you can see we're very oversold. We danced along this line, the $23 line, for quite some time, and now we've just popped over it. And I think that's the key thing. So I look at Wells Fargo as a totally different light from Citi and Bank of America. So let's go to our next market, and that is going to be Bank of America. And Bank of America just still looks like a disaster. It's the only one with everything minus, minus, minus. 3 triangles in a row red, not a good sign. It looks as though we'll see this market continue down. The close for the week, I think we closed the week. Gosh, I think it was very, very little change for the week in this market. So 618. Actually, it closed up 4.5%. It's hard to believe with a stock so small, but it did close higher for the week. The previous week was 591, and so it closed up 4.59%. It's hard to believe with a stock so cheap, but it still is not out of the woods. Still a lot of problems there with foreclosures and mortgages, and the trend certainly is reflecting that. So let's go to our next market. And the next market is probably the bright light of the bunch, and that's Apple. As you can see, Apple, actually, it did not make a new high. People are here, new high. It made a new high for a Friday, but not a new high for the move. This would be a 52-week high closing. Obviously, I would imagine Apple, who announces its earnings on Tuesday, I would imagine we'll see the market higher. But I want to show you one thing I was looking at earlier. I want to go into a line chart, and let me take this off the Donchian thing, and let me see if I can get this out a little further. And I think this is what I was looking at. I put a trend line in here. I said to myself, this is kind of interesting, just drawing a simple trend line, and it was from here to here. It seemed as though we just sort of intersected right on that it seems like it was an upward going channel, and right at the top of the channel. And the other thing that's interesting with Apple, every time they come out with their earnings, profit taking comes in. So I think that's another thing to be a little bit leery of. But the pattern's clearly positive. Love the stock, love Apple all over. If you go to the maximum, you can see where this market has done in the past. And basically, you see we've caught some very nice moves from this level here. This is around the $103 level, and we exited at 324, and we're back in at 355. Currently trading at 421.95. All-time high, I think, is around 422.80, if I'm not mistaken, but very close to that level. So should be an interesting day on Monday when we come back. But let's go to our next market. And the last market we're going to look at is the Dow. And the Dow is still, again, it's still not out of the woods yet. I mean, if you look at this market longer term, and we'll take all our triangles off, you can see we're basically short. But if you look at this market longer term, you can see, if you look at really longer term, it looks like you've got this position where the market's here, this is a lower high, and are we going to make a lower low? Are we going to come all the way down here? Is it possible? Well, I think you have to look at some things and say, yes, it is possible. And here's the reason why. You know, the corporations may have lots of money, but there's this thing on 99% that we're seeing on TV. It's more of a frustration that's around the world here, and that's definitely going to catch hold. You've got someone like Herman Cain who has no political experience. He's running for office, top of the polls over Mitt Romney and two well-seasoned politicians, and he has a fraction of their money. So I think people just want some change in this picture. So the question is that going to be like the Great Depression in the 30s when we see all these markets come down? It's possible, but I really don't want to get too enthusiastic about getting long stocks right now. Because the reason why is because our trade triangles are still negative. They're still negative from 1186 to 11,862, and we're currently 11,644. So it's possible we could see this market go a little bit higher, but let's just take everything off the screen, go a little bit closer, and we'll clear this off, and let's just go a little closer. Let's go for the last year to date, and you can see, take the triangles off, you can see we may see some more upside action here, but I would say, generally speaking, we are going to have problems around the 11,723 and also 11,915. Isn't that interesting? That level just below 12,000. Obviously 12,000 is the big number everyone's looking at, but if we just draw a trend line from this level here, just go just straight across here, it almost intersects the same place. So I think, generally speaking, that is going to be a very hard number to get through, 12,000 on the upside. So I think around 11,950 you'll see some professional selling start to come into this market when they see the correct technical picture. So again, this has been a little extended. We had some challenges in the beginning. I appreciate you staying with me. I hope you've enjoyed this weekend update. I'm going to be back on Monday, and once again, have a great weekend, and let's see what happens with the coming week. It should be a lot of fun. I'm Adam Hewison for Market Club. I'll see you on Monday.